Hello, everyone. Welcome to Wine and Real Estate. Normally, I'm drinking at this time, but I'll be nice with Jesse today, and I'll be focused and down to business. But anyway, welcome, Jesse from Calvert Home Mortgage. I'm really excited to have you on to talk about a great solution for flippers and people that do the BRRRR strategy on investment properties. So Jesse, welcome. Could you tell us more about maybe your background and what's your involvement at Calvert as well?
Thanks, Francois. Absolutely love to tell you a bit about my background in Calvert. I would have loved to be drinking wine right now. So maybe
do you have a bottle? Let's grab some. I have my big tap. It's 16 liters, so I'm ready.
Oh, nice. I don't have one handy. So next time you have me on, we'll make sure that we do it right.
Perfect. Yeah, you have to tell me if there's good wineries. Are there wineries in Alberta?
There are no wineries in Alberta. We're, in Calgary here, we're relatively close to the Okanagan. So,
okay, so you can
6
drive
hours
there.
away from some of the best wineries in Canada, which is great. But yeah, no, unfortunately, there's none here in our backyard.
And no drinking at the office, I guess. So
no drinking at the office, although I would make an exception for you.
There you go. I love it. I'm making everybody drink and discovering thing. A few weeks ago, I had a guest on and she was drinking wine out of a can. So it looked like pop, but it was wine. So I'm like, this is great for the office. You can have a quick sip at lunch and no one knows.
Love it.
Yes. But anyway, more seriously, so the BRRRR strategy, a lot of my students and people that talk to me, it's not an easy product to finance because usually with a BRRRR, you're buying a property that's distressed or something's going on with it and you're fixing it and you have to build your business case. So a lot of A lenders, it's very restrictive. So Calvert is a lot more open to that. And I think you have something designed just for that purpose, or flips as well. It's very short term.
Yeah, BRRRRs and flips. We have a product, and we as a company really have supported real estate investors in short-term mortgage financing for quite some time. And we have a product that really specializes in it. So what Calvert does is we provide financing for properties where investors see an undervalued property. And usually that property is undervalued because of deferred maintenance, because of certain stigmas, because it just doesn't show well to the point where the market doesn't want it and banks don't want to lend on it.
That's really bad.
and all we see is opportunity there.
Yeah.
We've done hundreds of millions of dollars in lending on this. We've done thousands of deals. We've seen a lot of success. We know what makes success. We've seen some issues and we know what to watch out for. So our lending really looks at the property as it sits, but more importantly, we look at what is the plan? What is the budget? What do you plan to do? How are you going to exit? Are you going to sell? Are you going to refinance? And we work through all of those details to understand what the after repaired value is. And if it is a wise investment decision, Calvert's going to support it in most instances. So where we see when we see profit through our analysis, we're going to lend on it, and we'll lend on it with as little as $10,000 down.
Okay, so it's gone down. I heard 20 at one point, which was very exciting.
That 10,000, Francois, is in Alberta.
Oh, okay.
We're still at 20,000 in Ontario.
Sure.
We may bring that number down, but right now, for the audience out there, if you're in Ontario, 20 grand down. If you're in Alberta, 10 grand down.
Perfect. And I just saw a post that maybe you'll see that one on Facebook, but #1 realtor in Alberta is Doug Ford. So the premier of Ontario. So he's making all investors sell and move to Alberta. So tons of people from Ontario are investing in Alberta. I am as well. Just because of Doug Ford's skills, he's just pushing us to go there because of the landlord and tenant issues. If you're flipping, that is not a problem. But if you're buying and holding, it is difficult. So just a joke. But anyway, I get why you're doing 10 and 20. Thanks, Doug Ford. That's why we have to put more money down, but just kidding.
Yeah, well, no, it is something that we're seeing a lot of is there's been a lot of appreciation through Ontario.
Yeah.
In really every market, every major market. And here in Alberta, we haven't seen that appreciation.
Not yet, but it's coming.
It's coming. Yeah. So there's still a lot of really good value that we're seeing here in Alberta. And it makes sense that we are starting to see investors come from BC and Ontario into Alberta. And also even on the rents, when we analyze affordability and the BRRRR strategy, we're seeing a lot higher likelihood of opportunities in Alberta cash flowing versus Ontario cash flowing.
Yeah,
Alberta still has a very strong economy. We have the highest average weekly earnings amongst any province. We have a bit higher of unemployment, which is a concern. But again, for Calgary, for instance, our average single family house price is I think just over 500 grand. So when I'm valuing property, very affordable. When I'm valuing properties here in Calgary and trying to compare them to what you could buy in, let's say, a Mississauga.
Oh my goodness.
Or even worse, Toronto, you got these properties 10 minutes from downtown, big, beautiful houses that are essentially half the price. So it makes sense that investors are starting to come to Alberta.
And lower taxes, lower property taxes, lots of good infrastructure too. Your highways are not jammed with like crazy traffic. The province has done a good job of building, well, from what I see, roadways. Like I live in Ottawa, we have one highway, the 417, and then the city decided, and the province and the government, to build a light rail train like you have in Calgary. But it was built for California, so it breaks down every few weeks. It's a running gag in Ottawa. So we have lots of traffic jams, a broken train, but properties are going up in value. So one thing I find about Ottawa, it's awesome for flips. And I think in Alberta, a flip would be more difficult because the appreciation isn't quite as high. But a BRRRR would be amazing in Alberta because you want to keep it. You can get that cash flow. Here, you don't want to keep it because of Doug Ford. Just kidding. But with the tenant laws and the cash flow and different things, it is good to do a flip. In my opinion, it's better to do a flip. So only $20,000 down. But what does that look like? Does that affect the interest rate you're getting if you're putting only 20K?
Yeah, it does. And again, our goal is to only be in for a short period of time. So if you're flipping, the goal is to be in and out as quickly as possible. So typically for flips, our money is sitting with the flipper for about 4.5 months on average.
Okay.
And with BRRRR, it might be a little bit longer because of the refinance. You have to stabilize rents and then refi. But so for the minimum down product, our interest rate is 15.5% annualized. So 1.29% per month.
Okay, well, it's not that bad. It's better than a credit card. So
it's better than a credit card. And in a lot of instances, when if you're getting into a mortgage where there's a payout penalty, even those 1.5% mortgages and they have a 3-month payout penalty, if you really compare dollars to dollars, our financing is going to be cheaper. But more importantly, we allow you to get the deal done. Like in a lot of instances, the bank doesn't want to do the deal because of the property, but also if you're doing BRRRRs or flips on a regular basis, the bank is just not going to want to do business with you, period, because they're not profitable for lending money out for 2, 3, 4, 5 months. They don't really turn a profit on their mortgage until I think right now it's about the 14th or 15th month of the mortgage. So they catch on pretty quick and just say, no, Francois, sorry, we're not lending to you.
Which makes sense because that's their business model. So
yeah. So we're there for the short term. And so the rates start at 15.5% annualized, which again, 1.29% per month. The more money you put down, the more risk that you're buying down for us, the lower our rate. Our lowest rate is 7.9%. And that's if you put 25% or greater down. Again,
Okay.
we're really a tool for the real estate investor community in order to get the property and execute whatever your short-term strategy is. We never want to see our borrowers leveraging our money any longer than they have to. So get your project done and sell it, or get your project done, get your renters in, and get your refinance done. That's what we always want to see from our clients.
And your team provide, I don't know if you still provide it, but a great calculator or analyzer. I've seen it before. It's awesome. You punch in a few numbers and you have a good idea. Is this worthwhile? Like, is it worth pursuing? Because it kind of spits out a number and you know about your profit. Because it's easy to forget if you're starting out about certain things to consider, like carrying costs and other fees. So.
Yeah, that's correct. We have a flip and BRRRR calculator.
Okay.
And really all you have to do is enter in your purchase price, your renovation budget, your time to renovate, and how long you think you'll be able to exit. And it'll automate all of your calculations in terms of profitability on a net basis. It shows you how much money you'd make if it takes 1 month longer or 1 month less. It shows your profitability on a cash basis. So it's a really handy tool, and anybody in your audience can reach out. We could share it with you to send to your audience if you'd like. We really want it in the hands of as many people as possible, and it's definitely not something that we're secretive of. The more people that have it, the better. And whether you use us for financing or not, that's cool. Use the tool.
Yeah, no, that's it. I love it because the more tools, the more information you have, the easier it is to take action and do something. So what kind of lifts are you seeing in Alberta? I'm very curious since I started investing there. For the BRRRR, what are people doing? Some of your clients, without naming names, but can you give us an idea of scale, like some projects you've seen?
Well, I'll give you an idea of kind of the bread and butter, and the bread and butter is consistent in both Alberta and Ontario. It's finding the property.
Yeah, so that's the name of the game.
Our best flippers and BRRRR clients know how to find the property. They're in touch with wholesalers. They're on Google, or sorry, on Kijiji saying I'll buy your house for cash. They're getting opportunities sent to them. They're focused on markets that they know and understand. So Francois is focused on let's say Ottawa, let's say Windsor, and I don't know, I'm just throwing out cities, Hamilton.
Sure.
And he's getting all these opportunities in Hamilton, and he's able to quickly assess the profitability and make a decision. So one thing that we do as a lender is we enable our borrowers to make decisions quickly. We can turn files around same day. Wow. That includes the appraisal, because we do our own.
Goodness.
Yeah, we do our own in-house valuations. So we're able to give you a firm commitment, and if need be, instruct your lawyer same day, which enables you to go to the negotiating table and give the buyer the terms and conditions that they're looking for in order to give you the best price possible. So that's what we're looking for. Now, in terms of generalities, our best flip products are single-family houses in major urban centers. So we like to define major urban centers as places with 50,000 people or more. Okay. And usually the renovations are relatively light. And by relatively light, I mean predominantly no structure, limited mechanical. You know, you're updating kitchen, you're updating bathrooms, you're doing flooring and some paint, right? So budgets under 100 grand and renovation timelines that are going to be under 3 months. Okay. Which makes sense with the money. Like you said, you want it to move quickly. So if you're getting into structures and basements and foundations, that's going to take months. It's going to take months, but it's also going to increase risk. So that's it. The bigger your budget, the more variables you're going to have, the more likelihood you're going to be off on your budget. So our flippers, our best flippers that are doing big volume, like one a month. So they're running through 12 houses a year. They're not hitting home runs. They're hitting singles and doubles. They're making 50, 60, 70 grand a pop, but that adds up.
It really does. That's not bad, really. Times 10, that's like half a million.
Half a million bucks a year.
Yeah, wow.
So they're just they're very focused. They're very deliberate in what they're looking for. And they're very, what's the right word for it? They're very focused. They're very deliberate, and they just have a repeatable process.
Okay.
And they don't venture out of that.
They know like the house has to be, I don't know, 1,000 square feet, so on and so forth, brick and whatever. They have certain criteria.
Yes, they have very specific criteria that if it checks these boxes, they move on and they move quick. So that's kind of what we're seeing everywhere amongst flippers. And amongst BRRRRs, similar, although we're seeing a lot more people add suites.
Yes.
Add units, trying to extract more rental value out of that property.
Because they're keeping them, so they need that cash flow. Otherwise, it's pointless to keep.
Exactly. And those things are taking a bit longer in terms of time, a bit higher of budget. But again, they're once again very specific, very deliberate. They have a process that they work through, and it works for them. It's a very repeatable process, and they're always learning. Oh, this worked, this didn't, and adding that into their process. So that may seem daunting for newer investors, but it's just, again, when you start off, you start with your hypothesis and you say, okay, this is what I want to do. This will work for me. You do a deal, you learn from it. You do your postmortem. This worked, this didn't, and this is how I'll move on to the next one. So we always love to have those conversations after the deal.
Yeah.
Especially with newer flippers, to say, hey, what worked? What didn't? How can we support you next time? And just give them the tools to progress and become volume producers.
That's excellent, because it's good for you. It's good for them. It's good for their contractors. If they're doing it themselves, they know where to find the supplies and things. So where are you seeing opportunities? Are there like you said, 50,000 and up? Are there cities that are kind of surprising you, that are interesting markets that we don't hear? Like you mentioned Windsor, Hamilton, Ottawa. Like I've heard those names before, but are there places that are different you didn't think about before?
We're always surprised on what works, but where we're more surprised is, you talk to one flipper, oh, I can't find any opportunities in Calgary, right?
Yeah.
And then you talk to another, and he or she is just bringing opportunity after opportunity after opportunity from Calgary. So there's no secret sauce of location. No. I don't think. There's no one location where there's, I guess you want to stay out of high competition areas.
Yeah.
But more and more, this real estate investing, this flipping and this BRRRRing is becoming common. So there is competition regardless. And it's just about having those sources of deals and working your butt off to find those opportunities. So, we're lending money in Thunder Bay, Ontario. We're lending money in Sudbury. We're lending money in Kitchener. We're lending money in Toronto. We're lending money where the flippers are bringing us the opportunities. And when we review them, we confirm that, yes, this is a profitable opportunity. But in talking provincial differences, we really think that there is more upside to occur in Alberta currently than in Ontario, just because of the appreciation that we've seen in Ontario. And also because of the economic fundamentals in Alberta are improving more than Ontario. The Ontario fundamentals have been good, and they've been good for a long time in terms of migration, in terms of employment, in terms of earnings, those type of things. Whereas Alberta, we've just gone through about a 5 or 6 year trough where things weren't great. The oil and gas sector was really hurting, which is our major economic driver. And as such, real estate prices have really been stagnant and in many instances have decreased. So
wow, we haven't seen that in Ontario in 20 years or more.
Exactly. So that's where you get this. Okay, there's a lot of really good green shoots in Alberta as it relates to our economy. That's the leading indicator. The lagging indicator will be housing prices. We're starting to see action. We think that there is more upside in Alberta right now than in many places in Ontario. You can find some smaller communities where they haven't had that appreciation, but even in Ontario, it's rare. And again, the smaller communities don't have the economic base to properly drive a housing market. What's happening is people are just getting pushed out of the major economic bases and into the smaller centers. But what we've learned from history is when things turn, those smaller economic centers suffer the hardest, the quickest. So as a lender, we want to stay away from that type of behavior.
Yeah, because there's fewer employers, and you're, I don't know, 100 kilometers away from the city commuting. People revert back to the city or closer to the city. But I love Calgary. So population about 1.4 million from what I read. Yep. Ottawa, we're 1 million people. So the same house that you'd pay about $1 million in Ottawa, from what I've seen in Calgary, you can get it for maybe 600, 550, which is crazy. So it shows the space, like you said, for appreciation. And salaries are lower in Ontario, higher taxes, and many other things. So the cost of living, I know a lot of people are kind of waking up to that, and you can bring your work with you. So we're seeing a big exodus in Ottawa of government workers that don't need to go to the office, and they're taking their jobs with them or taking on new jobs in Alberta and other areas. Do you only land in Alberta and Ontario, or have you expanded to other provinces at this time?
No, we are only in Alberta and Ontario at the moment.
That's pretty big anyway, but
it is really big. We will. We are going to develop and review the opportunity to move into BC.
Okay, great.
We're getting calls all the time from BC investors looking for
a natural progression. It's your next door neighbor. So
looking for our financing, but we're really keen on the service that we offer. And I don't want to, we're just growing the Ontario business. We only entered Ontario 18 months ago.
Oh my, and yeah, it's a big market. I mean, we're the biggest province in Canada by far. Almost 15 million people. So yeah, that's a big market. You could be busy for a while.
So we want to make sure we fully execute and have the right resources that we're investing in Ontario to give the amazing customer service that we pride ourselves on giving. And we don't want to dilute our service. So this year we'll fund about $360 million of deals. Wow. The bulk of those being to real estate investors. And about 150 of that will be Alberta, and 210 will be Ontario. But if you look at, Ontario is basically 4 times the size, so we should be able to get to, that $500-600 million a year when we're fully servicing the Ontario market. So our goal right now is just to make sure that we're getting in front of everybody we should be getting in front of in Ontario to service their flip and BRRRR projects.
Excellent. And question about Calvert. So where does the money come from? Is this can people invest in Calvert, or how did you fund this company?
Excellent question. So we are a mortgage investment corporation. So we're a mortgage fund.
Yeah.
Our capital comes from 2 sources. High net worth individuals who invest in Calvert and buy shares. My partners are all investors. Really every employee of ours is an investor.
Okay, great. So it's sort of employee owned, not quite, but
yeah, sort of. All of our employees, they're a lot of their bonus compensation is based off of how we perform in terms of.
That's why they're so excited, because every person I've spoken to, they're like so committed. I'm like, what do you guys drink over there?
Yeah, we're lucky. We have a really great team of employees, a great management group, and we just do business the right way. So the bulk of our money comes from high net worth individuals through owning shares of Calvert. And then we have a bank facility from a banking consortium that they lend us bank money that we leverage to bump our returns up. Okay. And it also gives us the ability to raise funds strategically. So my most expensive money is when I raise funds from the high net worth individuals and pay them the 9, 10, 11, 12% return that we've historically been offering. So it's better for my current shareholders that we strategically raise money from banks at prime +1.
Yeah, that's cheap money.
And it leverages up our returns. So yeah, we are an investment in that we do accept shareholder funds from high net worth individuals. And we also use bank leverage.
That's great, because a lot of investors, so they're doing all this, they're flipping, burring, accumulating wealth. Then they turn 50, 55, 60, and then the tides kind of, the wave, I don't know, changes, and now they want to divest and become more passive, and now they're high net worth individuals. So, and they're looking at REITs, mix, other passive or sort of passive investments. So this is great. That's kind of why I was asking, because I have students and an audience of different ages, different phases in their life, or professionals that are busy. They're like, this sounds great flipping, but I'm a physician. I don't have time. I just want to invest my money and hear about what you're doing. So this is great.
Right. So yeah, those are, and what you just said, those are some of my favorite investors. You know, those people who have leveraged our capital, who understand exactly what we're doing, who understand the risk, and have grown a portfolio to where they want to be more. Maybe they want to be more passive as a percentage of their portfolio. So
that's it, to diversify.
Investing a bit with us. Yeah, we have one gentleman right now who's one of my favorite borrowers, and he's built a real estate empire through. He's a real believer in fire, and has built an extreme net worth, and he's ready to slow down. And he's, you know, we're talking about investing in Calvert. So it's an awesome progression that I'd love to see a lot of our borrowers do.
Yeah, it's so cool to see the full cycle from the first flip to becoming investors and being more passive. So that's great. Well, thank you very much, Jesse. I don't know if you have other, like, some sort of final word of advice for investors you'd like to share, some extra thing we did not cover.
Well, there's a lot of stuff we didn't cover, but I hope I could be a guest on future podcasts with you. I know you and I were talking, and right now Calvert's looking into a cool, it's basically a more streamlined joint venture program that reduces the friction and even reduces the cost to the lead partner that I'd love to share with the audience in the future. But I guess, you know, my advice or recommendation is get out there, learn, roll up your sleeves, work your butt off, and you will be successful. Surround yourselves with the right people. Join groups like what you have to offer, Francois, and get out there and start executing.
That's amazing. And yes, you'll be on again on my my Facebook group. So we're going to be talking to investors live that are looking at flips and BRRRRs and joint ventures. So maybe by then you'll be able to talk about that potential new product. I'm super interested and intrigued. I'd love to have the scoop on that and see people taking action. And that's it. So, wow, thank you very much. And yeah, we'll have to have you on again on Wine and Real Estate with some actual wine.
And we'll be drinking wine next time. And what I'd like to do is, ahead of time, I know my wife is big time into wine, and behind me here is our wine cellar, actually.
Oh, nice. You have to show us.
I'd love to. I will show you, but I'll also I'll make sure we send you a bottle of wine that I'd like for us to both try out.
Perfect. I love that. I've been discovering from investors some nice Italian wines. I don't usually like white wine, but one of my private lenders sent me a bottle of Soave. It's a nice white wine.
Yes, I love Soaves.
I know. I never tried it. He's like, you have to try it. You don't like white, but you'll like this one. And at first I didn't believe him, and now I'm hooked. So I'm sure you'll find something else to sway me to something new. So this is great. I can't wait.
Okay, we'll make it happen. Love it.
Excellent. Thank you so much. Take care.
Thank you, Francois.